Moving on, private sector is expected to record a dip in sales as a result of coronavirus pandemic, which has subdued demand for fast-moving consumer goods. Head of Africa Research at Standard Bank Group, Jibran Qureishi, says declining employment rate, which accelerated in the second quarter, will have an underlying effect on consumer buying power to overall investment for a while to come.
An overview of the economy in the first half of the year indicated that inflation stood at 4.95% by the end of June, where commercial banks had restructured loans amounting to 844 billion shillings to cushion borrowers. According to the Kenya Association of Manufacturers Chair, Mushai Hunya, moratoriums by commercial banks offered in response to the economic effects of COVID-19 pandemic, as well as the ease of restrictions of movement, have led to a slight increase in consumer demand. 61% of businesses have since benefited from the economic stimulus measures introduced in March to support the private sector, with only 6% benefiting from payment of pending bills. However, there is growing concern over job market volatility that has led to massive job losses. Owing to this, Head of Africa Research at Standard Bank Group, Jibran Qureishi, warns that this would lead to depressed consumption, especially in the fast-moving consumer goods market. He adds that businesses should begin innovating, taking advantage of some of the opportunities that the pandemic has brought forth, such as technological advancements. Gradual reopening of the economy has seen a steady growth of the floriculture and horticulture sector, buoyed by higher demand for tea, coffee, and avocados. Stakeholders in the leisure and hospitality industry, however, peg the full recovery on a medical solution to the COVID-19 pandemic. Regina Manyara reporting for Channel 1 Business.